China's problem with property and the domino effect of Evergrande's huge debts. Queen Wang, Professor, Marketing and Innovation, Director, Marketing Innovation, Chinese and Emerging Economies Network, Warwick Business School, University of Warwick, UK, reports on the conversation. A couple of years ago, we remember the reports on the ghost cities of China. They even had malls built, schools, hospitals, train stations going to these empty cities full of hundreds of huge apartment buildings, and yet they were empty. What were they being built for? That was the question everybody was asking. The Chinese property giant Evergrande is suffering under an enormous pile of debt, reportedly worth $305 billion US. There have been angry protests at its headquarters. Shares have tumbled. The eyes of the financial world remain anxiously focused on its future. Simply put, the situation at Evergrande is dire, and the potential impact of its troubles reaches far beyond the company itself, with devastating consequences for individual homeowners in China, businesses, and also the global economy. The big question is whether Evergrande will go bankrupt. The company has fiercely denied the prospect and insists it will find a way out of trouble. Let's remember that these companies are in China, and China, of course, is a communist country, and it can support any company it wishes to. But so that it would be a going concern. But some industry experts predict that most likely scenarios that the company will eventually seek bankruptcy. Reports suggest that a state-owned investment company has been lined up to manage Evergrande's assets. From the Chinese government's perspective, the aim will be for Evergrande to come to an arrangement to repay its debts, hopefully minimizing the impact of its collapse on the financial sector. Please support my Patreon account since YouTube has again demonetized my YouTube channel. The daily posts are 5 videos daily, and they are totally different from what I have on my YouTube channel. Thank you so much for your support and that you find all my content so interesting. You'll find the Patreon account details in the description box below. This is just one image of the empty cities, the ghost cities of China. Now, those most at risk include the companies it owns, who can go bankrupt, or banks it is in debt who can lose so much money that they can't lend to other businesses, which could then also go bankrupt. So it's a domino effect. And since Evergrande borrowed heavily from state-owned banks, its outcome puts significant pressure and a potential hefty loss on the shoulders of the Chinese government, of course. In an attempt to calm nerves, on September 21st, the chairman of Evergrande, Xu Jiayin, said the company will pay the annual interest on the debt worth $600 million. It's hoped this will reassure the company's employees and send a positive signal to the company's stakeholders. So far, such measures seem to have had at least a temporary effect on the stock market, which has seen dramatic falls over the past 6 months. On September 23rd, the share price of Evergrande went up, but the next day, concerns grew once again after an interest payment was missed. A knock-on effect: the immediate impact of Evergrande's troubles will be on China's once booming property market. The sector represents 7.3% of the country's GDP, compared to 4.1% in 2000. It's a market which been overexpanded for many years, with a debt level of one big development firm already very high. If Evergrande were to collapse, it would cause a domino effect across the sector, potentially leading to the demise of more businesses. Indeed, the China Shenzhen Credit Rating Group has already downgraded the outlook of China's property sector to negative. This change makes it even more difficult for those companies to raise funds, exacerbating the debt situation and making borrowing more expensive. Beyond the world of property, the collapse of Evergrande would have major ramifications in other sectors it's involved with, including consumer electronics, building materials, furniture, and electric cars. The situation remains fluid, and it's difficult to predict what will happen next, but in the longer term, Evergrande's future, if it has one, may be more in line with China's longer-term strategy on making accommodation more accessible to more people. The Chinese government has said it wants to provide ordinary people with affordable housing, recently re-emphasizing the philosophy of common prosperity and the idea that a house is for living in, not investing in. For this reason, Beijing is keen to dampen the overheated property market and steer overall investment to strategically important sectors, including semiconductors, new energy, and pharmaceuticals. But private companies of any description are likely to be hit by the fallout from Evergrande, a private enterprise which has grown into economic giant. State-owned enterprises in these strategically important sectors, meanwhile, are likely to gain greater advantage in terms of trust and resources. In the immediate future, the Chinese government may have other pressing concerns. If Evergrande goes bankrupt, it will need to engage in the expensive task of protecting tens of millions of homeowners and avoiding social unrest as well. This is On the Conversation. Please leave your comments about this. Thank you for your support.